Good afternoon, everyone. So, my panelists here have promised me that this session is going to be like a power packed, punched pack, zingy, and only like a 40-minute session. So, let's get started without any further ado. So, my first question is going to be for Vikas. So, Vikas, we were having like a bit of discussion about this outside the room as well. So, what do you think are the key components of strategic financial leadership, and how do you believe they contribute to sustainable growth?
Thanks, Sumedha, and good afternoon, everyone. I hope you had good lunch and not sleepy. We'll try and keep you awake, but no promises. So, Sumedha, the question which you asked is a bit more generic, but I'll try and give my perspective, how I look at it in my
Sure.
organization. And I'm sure my co-panelists may have a
Yeah.
slightly different view. So please feel free to jump in. So from a strategic financial leadership perspective, few things are very, very critical. First and the foremost, how I look at it, how do I align the financial goals with the overall organizational objective? And when I say that, you need to go a little bit deeper, that what the long term goal of the organization is, and how do I provide the how do I align my financial goals with that? How do I provide resources to realize the long term objective of the organization? That is super critical, and that's where I would like to quote one example. If you look back, Disney, when they started investing in Disney Plus, there was a lot of backlash. In fact, their share price went down, but that's where that entire financial planning and long-term investment comes into play. And today, Disney is when they started actually investing in OTT, and they've not now started realizing the gains of those investments. So sometimes you need to take those long-term bets, get your financial strategies aligned to the overall long-term strategies of the business, and be a little bit more patient and not be too focused on short-term goals. That's one. Second, I think from a strategic finance leadership perspective, uh, we as finance people are good at, and that's what we were discussing just before this panel, we are good at financial analysis. But I think what is important, that we need to build the commercial acumen in what we do. When I say commercial acumen, so we can do a lot of financial analysis, come up with a lot of variances, graphs, pie charts, and so on and so forth. But it's important to understand why a particular trend, what are the factors which are external to the organization impacting that particular trend, what are the factors which are contributing to that trend, and how do we create specific actionable out of that commercial and financial marriage, right? That is super critical. The third piece which I believe is super critical, sometimes we not pay so much attention to it, is communication and collaboration. And when we say communication, we spend a lot of time and energy in communicating to the external world, but less so to the internal world, right? I think internal world communication, even from a financial perspective, is as important, if not more, as communicating to the external world, because your financial decisions impact different business lines, impact different departments, individuals. So getting people aligned and getting the collaboration on the table is super critical. I'll give you one example what we have implemented internally, or in fact two examples. One is we've implemented a group investment forum, and that group, as a CFO or as a finance leader, one of the most important job is resource allocation. While it's important for you to do that, but it's important for you to also get other people aligned to those decisions. So what we've done internally, we've created a group investment forum, which is a constitution of people from different functions. So whenever a decision is being made that we're going to invest into this particular pocket and not there, everyone on the table has an equal voice, and accordingly we come up with investment decisions. That brings a lot of collaboration, and it tells people why we are investing in a particular pocket. The second such example, when I talk about collaboration,
Vikas, just a follow-up question. Is that like a cross-functional team which you have created?
It is a cross-functional team. It is a cross-functional. And second example, I will give you a little bit more insights there. So I am an active member. We being a technology company, we do at least 1 or 2 hackathons every year, where our tech team comes together, spend 2-3 days back-to-back innovation, come up with 20-30 great ideas. I am a regular participant in those hackathons because that's what gives me a lot of insights. What's happening? What are the areas to invest on? So tomorrow, when some ideas will come onto the table, purely from an investment perspective, I understand what the team is thinking behind it, how they have kind of done that hack, and what is the potential of scaling that hack. So I think that is the kind of participation of financial leadership beyond just looking at the numbers is super critical in today's world.
So thank you so much. You have made such excellent points about finance CFOs or financial leaders being patient. You've shared, a couple of examples as well. You shared the Disney example, which was very useful, and creating these cross-functional teams which can add to the organization. Since we, talked about being patient, but most of the organizations, whether it is public or private space, everybody wants quick market value creation. Especially if you are a public company, you want to show the value to the market, to the shareholders, that what is the return on the investment. So this segues pretty well into the next question, which is that this question is for you, Mayank and Vikas, that how can financial leaders balance short-term financial objectives with long-term strategic goals?
Good afternoon, everyone. Thank you. So I think there are few things which, as a finance professional or even as anyone in management, need to do. So first is, in my view, we need to set the clear priorities, right? What are our priorities in terms of long run, and what are our priorities in terms of short run? Because as you rightly said, we have to manage both the things. Because long run, you could have a plan of 5 years, 3 years, but for that you can't can't leave your short-term performance. You have to report numbers quarterly. So one is you have to have clear priority. Then second is measurement and accountability. Right? Unless you measure, how you are progressing on long run and how you are progressing on short run, and who is accountable for what, things may fall out of place, and everybody, short-term performance people will blame on the long-term project and vice versa. And this also, I'll give an example from my past experience, although I'll not name, not give the name. So I was working on a divestment thing. Okay, so we are selling a business, part of a business. Now, and it so happens that everybody, unofficially, a lot of people also get to know, right? There are rumors, and because same thing has happened in past also. Now, if you don't end up selling, and the business, because it's a long lead time business, long cycle business, and it continues with you, you will be in a big mess. And to clean up that mess, you are going to take as much as a mid-term time, right? It will, if you get into a wrong situation, it will take a minimum 2 years, 2.5 years, and it's a significant part of your portfolio. So that way we have to balance both. Then the third one, I would say, is risk management, in terms of, again, to balance both the things. Another one is communication is key in terms of, with your stakeholders, whether it's internal or external, because they should also understand what you are doing, why you are doing, and for whom you are doing that. So these are a few things. I think there could be a more points as well. So where we need to focus in terms of balancing the long term and short term, and both have their own importance, and you can't leave one for the other. Thank you.
Understood. So I loved your point about explaining the why to everybody. So Vikas, maybe if you could also throw some additional light on how do you get everybody to agree, in case if there are any disagreements, how do you align everybody to common objectives, whether it's short term, long term? Yeah.
Yeah. No, so I think to add to Mayank's point, I've been personally on both sides of the table, being part of tech startups for the longest, and now being part of a listed company, which is listed in Australia and US. So I completely understand and appreciate those quarterly reportings, and it took us long, when we got acquired by a listed company to adjust to that quarterly cycle. Startup mein to it's always tricky, right? I think Sumedha, how do you balance short term versus long term? It all depends on, especially in today's world, when the world is so dynamic, the business cycles are only getting shorter and shorter. Earlier, it used to be you start a business and then it takes 4, 5, 6 years to is a gestation period, and then 50 years is the life of the business, or at least 20 years is the life of the product, right? The product life cycles are too tiny. Even the life cycle of a business is also short. So how do you plan long term is all about how much you are willing to invest in your long term growth, how much you are willing to invest, not only looking at disruptive technologies, but also disrupting yourself, because either you disrupt yourself or somebody else from the outside will come and disrupt you, right? That's how I see it, at least internally. Coming back to how do you balance it, quarterly results are important. You have no option but to deliver that, but at the same time it is important for you as a business leader or a finance leader to create room for the innovation and long term investment. What we do internally, we again, I keep on quoting internal frameworks. So we have a framework of CET, which we use internally. So CET means core, extend, and transform. Core means what we are doing internally and what is running right now. So how much is the room for that particular piece? Then second is extend, which means how do I extend my core business? Like today I'm present in 15 cities. How do I go to the next 10 cities? Today I'm present in this particular product. How do I do adjacent products? And that is where the investment, and how do I create room, and what is the wiggle room I have in terms of success metrics and all. And third is extend, which is a little bit of moonshot, where I don't know what the success metric will gonna be, but I'm willing to invest for the longer term, and we create room in our P&L for that. If you do that, then it's easy to handle those market expectations, easy to handle your quarterly results, and so on and so forth. And obviously you need to play around and adjust sometime, but at least then you know how much to adjust in which pocket. Otherwise, if you don't distinguish, then your moonshot projects or the longer term projects, which will give you a sustainable growth, will be the first one to cut in a downturn, which is the worst thing to do.
Just want to add something. Yeah, just wanted to add something. So thank you guys for having me here. So I think one very, very important thing is on the short term, most of us enter into an organization which is already up and running. So it's about the fact that, and I'm talking about more at a leadership level. From a leadership level perspective, when you get into an organization, you need to deliver today. That's the first and fundamental rule. But you also need to deliver for tomorrow. To deliver for tomorrow, you need to undertake either a resource allocation, change in business direction, any other strategic decision making to ensure that you are always thinking long term. So any organization, in my view, is always all about creating value. You create the value, you create a consistent and sustainable value, and that value is created on a long term, but through the decisions that you end up taking. Yet, very importantly, if it's a listed entity, you also cannot go back to the street and say, look, guys, I want to do this over a 2-year period. So for 2 years, you're going to have completely adverse results. You're going to have a bad cash flow. You're going to have a pathetic balance sheet. You can't do that. So you have to keep on. And I think what Vikas was mentioning very clearly was the quarter is very important. So you undertake steps so that your quarter or your financials do not deteriorate. Yet at the back end, you also keep on undertaking either a resource allocation or separate activities or decisions to ensure your long-term goals, be it a 1 year, 2 year, 3 years, is also met out. So I think that's exactly where I think very importantly we need to balance the short-term versus long-term. Without that, I think existence of a finance or existence of a leadership itself is not there.
So I love, all the three, all the three responses. I think your short-term and long-term strategy itself, talks about risk management, because ultimately you're balancing what you are doing today, what you're delivering today versus, what you're creating for the future. So everything is working well for the organization. You are creating consistent value for all the shareholders and making sure that the business is sustainable. And because you also spoke about the innovation bit, that is, with respect to long-term projects, that you keep investing in such projects which will deliver the results for your organization for tomorrow. And there goes my next question to Siddhartha and Upma on similar lines, that what role does innovation play in shaping strategic financial leadership, particularly in terms of disruptive technologies and business models?
I'll go first.
Yes.
Okay. So in my view, I think when you take decisions towards the long term, you need to undertake steps. You need to innovate. Innovation can be of different kinds. Largely when people talk about innovation, it's all about the fact, if it's a consumer goods industry, it's about how many more new products that you really bring into the market. That is one part of innovation, a very small set of innovation. That's not really a complete innovation. But if you want to take innovation in its true sense, it's all about the fact that on one side, a product innovation is important. The second very important thing, process innovation. You need to undertake changes in your process. A process change, just to kind of give you one example, is about your current function from a current setup to a shared services environment, where your entire cost structures can get challenged out, is a process-based environment. You can undertake a tech-based innovation. So for example, today we bring about ERPs, whether it's an SAP, Oracle, XYZ, whatever you want to get on. Again, it helps you to bring a lot more technology into the picture. Today, when you get into the market, a lot of these startups, a lot of the new age companies which are coming up is all very tech heavy. Very recently, in our organization, we've installed things which are towards a reconciliation software. Most of us have tie-ups with organizations which are doing the ASP, GSP. Now, these are all small techs, but these are all techs which are in place. There are a huge amount of money, startup environment towards data insights. Now, these are all technology. How do you use technology? We have a lot of predictive analysis coming into the picture. What is the market demanding for? So how are we bringing a lot of this technology into the framework? And what are we doing? Because nothing is going to come in till the time those decisions are undertaken for us to bring about the change. It ultimately goes back to say, what are your long-term goals? If your long-term goals, let's say, is about growth, you will deploy technology or innovation very differently. If your long-term goals is to say, the state in the company where we are in, we have a very optimized revenue structure, I'm going to only have a 4 to 5% growth, then to maintain your profitability, you have to cut down on cost. To cut down on cost, you start bringing in efficiencies. Just to give you one very quick example. So I hail from a consumer goods industry, more from the cosmetic side. And when I came into the venture about 5 years back, we were operating out of 6 manufacturing units. So very early on, we took a call that we need to start merging these entities. We need to build scale. We need to build sustainability. We need to build the right compliance environment. So we've collapsed those 6 manufacturing entities into 3 manufacturing entities. However, my production capacity has gone from a 1x to a 2x. So we built in larger capacities, larger scale. These all required investments. It all required the foresight about where we want to reach on. And that's exactly how we ended up reaching there. If you were to talk about into the e-com space, a very similar kind of a setup, people are doing 3P. They do not manufacture at all. So there is a zero manufacturing. They're able to scale up. But it's also about the decisions that we end up taking. And at least in our case, we ended up taking a decision about manufacturing ourselves. For us, logically, it was more about expanding the capacity, which we did. So that's the kind of innovation, that's the kind of strength that you need to bring to, depending on your long-term goals.
I'll take it from the Siddhartha, and he's talked about how the innovation is important while we are into the disruptive world. When you talk about the long-term strategy, you'll say, what exactly are you looking at? Your stakeholders, be it your customers, be your investors, be your regulators, you need to be very clear what exactly you have been going from the long-term perspective. And in the disruptive environment, without the innovation, you just can't survive. So for me, innovation is something that's part and parcel of your regular spend, what you're doing it. Without the innovation, while you're keeping a very tight eye on what my competitors are doing, how the economic environment is being changing, but the things are changing so fast, we really need to invest into the innovation and the R&D. And I'm not just talking about the finance as a function, but for the organization at large. Unless, I mean, suppose if I'm into the product company, what exactly I'm doing it for my customers. Today, my customers are getting X. What would happen after 5 years? That's something we need to think through it, and that's how the whole piece of innovation. So most of the time, I mean, there are a lot of companies, we're actually carving it out some part of our spend as call it as a R&D spend. That's something really required for to have a sustainability growth. And when we're talking about all our long-term objectives and how to align our innovations and all our R&D towards that long-term objective. So innovation is something which I'm saying it's like a core for any business. And if anybody is not thinking through, we are saying we are doing good today. We never know what happens tomorrow. That means we are not prepared ourselves for tomorrow. So it's like we have entered into that world. Even in the finance field, gone are the days when people used to prepare the books of accounts, then the trial balance, and then the financial statements used to come. Now with this AI and ML, we just get it real time, the dashboards, even the balance sheets and your analysis. So you won't require a person to tell you what happens to your variance, where exactly you're doing good, what are you doing bad, what happens to that geography. So that things have already imbibed into our day-to-day activities. So we are into that stage where systems or the technologies have already taken over the activities which the human beings are doing. So that just talked about bank reconciliation. So most of the places there are RPS which are already institutionalized. Even our you need not even send the mail. There are bots and they're sending the mails on your behalf. So we are enter into that era. Now what is the next thing? That means the finance team need to really upscale themselves, have to have a complete business mindset. So it's no longer a thing has happened and we are reporting. We have to partner with the businesses. That means we need to go to the root cause in the sense understanding what type of a business, what are their pains, and how we will ensure that we will get a risk adjusted returns. That means wearing the hat of a risk head, saying that there will be a risk. If this risk is there, are we prepared for it? So it's all on to the predictability, making sure that what if analysis, are we prepared, and supporting the business partners with those data points online so that they are also in a journey of strategic sustainability. That's what I feel. So for me, innovation is like a very basic core things for any organization.
So all the panelists here have, talked about bringing technology into, to the forefront for having a good today and even a better future. And we talked about, from technology perspective, we talked about two different aspects. One was the process innovation side of it, and the other one was the product innovation. And from process innovation, since the business models are changing very, very swiftly today, it's important to make sure that your processes are very agile. And even when you are implementing a new technology, you are sort of rethinking about your processes as well. And all the insights and different examples have been shared by our panelists. They all belong to a different industry set, so I can see the diversity in the viewpoints as well. And thank you so much for that. And with this, my next question goes to Siddhartha and Mayank. So we've talked quite a bit about communicating communicating the value which we are creating internally to internal stakeholders and to external stakeholders as well. And the question is around that how can organizations effectively measure and also communicate the value created through strategic financial leadership initiatives?
Yeah, I think this is a very valid question, and measurement and communication is key, because otherwise people don't understand what you are talking about or what value it brings. We may keep talking of long-term projects or any strategic objectives, but unless we communicate and measure them, it's not right. So first and foremost, we need to have a clear metrics of measurement of the any long-term project or any strategic decision what we are taking. So we know, okay, these are the KPIs against which we need to measure. Second, we need to have some quantified financial impact, right? What is the financial impact which we are looking at and how we are going to measure, so we know, okay, this was the target, what we have achieved. Third one I think of could be the ROI, right? What we are investing, what we are getting, and also have to have a timeline associated with the numbers so that we can measure on a progressive basis. Otherwise, you can't measure completely when the period ends or the project is over. Next one could be, I think, benchmarking with if you have know something similar in some other industry or your peer group, so that again you can compare and see. Then now along with it, in my view, when we are talking of measurement of the financial impact, we need to have a metrics for the qualitative assessment also, because you are talking of a strategic thing. So now that for that you need to have a qualitative assessment also. It's not just about quantity or the how my budget was 10 million, I spent 9, I am good. But what is the quality? That is key. Then a big part is obviously the stakeholder engagement, and because they should know what you are doing. And then the last but not the least is communication in terms of transparency and accountability. So people know there is nothing hidden. Whatever is happening, you are sharing with them how it is performing, and accountability has to be fixed for the metrics, because as much as accountability is fixed and you know who is responsible for what, we can drive it better instead of something lying falling in between the cracks and nobody is responsible. So that's what I feel. I think Siddhartha can.
Thank you, Mayank. So I just wanted to raise a very fundamental question about measure. So I think there's a lot of things about measure. So in my viewpoint, anything and everything in life can be measured. We very qualitative thing. Person A is better or person B is better. We do it through appraisal. I'm not saying it is right. It may not be right. For example, it's again sometimes it becomes perception based, but then we still measure. Coming to the second point, and early on I kind of picked it up. For example, a green chili. How hot is that green chili? There is a technical measurement available for something like how hot the chili is. So when a lot of people are aware that Guntur chili, or these are supposed to be the hottest chili in the world, one of the hottest chili in the world. There is a measurement criteria there. Now, just to shift gears, all of us have some kind of a favorite restaurant where we go to, and you find that there is one particular dish or a few dishes which taste exactly the same month on month, day on day, whatever, year on year. Why? Because there is a proper recipe in which it gets measured. It's slightly kind of moving off. There is where my office is, there is a tapriwala, a chai wala, who's like literally on the road. He has a stall there. And the other day we were down, couple of us, we were down, and we saw that he was making tea. And we said, he was periodically looking at the watch. And he said, what are you doing? He said, sir, this has to be boiled for 18 minutes. So we got interested, a guy who's on the streets making, so he was a decent guy, whatever. 18 minutes he has to boil. And then I kind of, obviously it creates an interest, and you said, okay, what more can you do? So he said, sir, I need to put 5 liters of milk liquid. I need to put, so this is the proportion of tea and the sugar mixed together which I need to put in. And believe me, I have had tea from him for quite some time. It tastes exactly the same. So all of this comes back into the measurement criteria, and I think it's important for all of us, and I'm sure all of us, when we deploy money in terms of marketing, media spends, it's a nightmare for a CFO. I need to put 15 crores into media. But then in today's world, there is a measurement which happens whether the media is effective or not. So I think measurement becomes so important for all of us to track. And we do maintain different levels of measurements that we undertake, whether money which is there. I think Mayank did talk about various elements from a communication, timeline, ROI, blah, 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 which is all very important. But all of us have our own set of metrics in the way we look at things in terms of how we measure whether that the effectiveness of, let's say, a campaign, a spend, or an activity has happened or not. Ultimately, if we were to reach the final goal that we are targeting, it has to be through a series of measures, what we are targeting for and how have we reached it. So I think that's the way we see measure, and that's the way we see it happening.
Yeah. So thank you so much for your responses. So I think both of you, talked about definitely communicating the why of measuring a certain KPI internally to all the stakeholders to ensure that everybody is aligned and on the same page. And on the other hand, Siddharth, you talked about measuring the impact of the investment, which is possibly the most important element.
Measuring the impact of investment, and I think that's where it becomes tricky. See, what is running, it's still comparatively easier to measure something which is new and which is kind of it's kind of a technological investment. You don't know where you are headed to. It's a moonshot project. How do you define the success metric? That becomes super critical. It may not be quantifiable, but there might be certain success metric which you can define internally, which may not be even qualitative metrics, but at least you know that by investing so much I want to get there, that my at least product market fit should be available, or at least I am able to see a product which I can go and take it to the market. So different milestone needs to be defined clearly, because while we know we are living in a very agile world, but at the same time, as a CFO, it's our important responsibility to know how judiciously we spend the money, right? So we should know when to pull the plug. That is where measuring and clearly defining the success metrics, even in an unknown territory or uncharted territories, is super critical.
Absolutely. So we are all utilizing the shareholder money to expand and grow within the organization. So obviously we will be answerable to them, not just on a quarterly basis, but at every juncture. And you made like an excellent point about these moonshot, projects which are aimed at long-term growth and sustenance of the organization. That it's very important to keep recalibrating time and again. And throughout this conversation, one word, technology, and different things which you are doing internally within your organizations has, come to the fore. So my last question is pretty much, on that, what are the emerging trends and best practices in strategic financial leadership that organizations should be aware of? So we are talking about the trends, not necessarily just technological, but what are the trends, Upma? I would want you to maybe start by responding to this question in detail, and for rest of the panelists, it'll be like a rapid fire.
Again we talk about the sustainable growth. The trends is, like, if I just talk about the finance, we already have all the data available, analysis is available. What is the next level? Partnering with business. So effectively the CFOs are now becoming the business CFOs. They've been sitting with the businesses, they've been participating in the discussion making, be it product launch, be it any process improvements. So they are now becoming the partner with the businesses. With that, the whole agility comes in place. The mindset changes, how we are spending, and the whole piece of, the CFOs are typically onto the cost. They are moving from the cost to understand the value creation. The moment you understand the value creation, and that is the long term, they will start thinking about the ROI. On the trends is, nowadays a lot of industries, and that's happening in our company as well. It's all availability of the real time data to the business partners. Let's not shy away whether you make mistakes and all. They should have real time data so that they can do the course correction as they are doing their business. That's something very important. And the predictive analysis. What if you will increase your sales, say by X percentage, how your ROI will look like, and if you will reduce it, how it will look like. That should be handy for them, so that they can take the decision accordingly. Third thing is, like, collaboration comes extremely important, and on the trends is, CFO is like wearing the business hat. That much I'll say. And technology is playing such a large role, whereby today you have your sales, you are predicting how the things will happen, and in your predictive analysis, you are also creating the worst case and the best case scenarios. So while CFO is talking about predictability and all, I always make sure that please take care. We also responsible for managing the risk. So if the risk is there, you have to carve out certain percentage for the risk, for the contingency, so that you are prepared and you will never have such certain sort of exigencies that comes up into your P&L. And that's something I
Sumedha, I'll try and keep it very, very short because you said rapid fire. So, from a trend perspective, two things which I feel is super critical. One is environmental and social impact. We are all talking about value creation for the business, but at the same time, how does that value creation impacts the environment and society as a whole? And that's not for somebody else, but it's for the business itself, because it's going to increase the cost for the business at the end of the day. Second is digital transformation. We are living in the world of Gen AI. We have to transform our business, and it is not a one-time activity. It is an ongoing, continuous effort to keep on innovating and re-innovating your business processes, business models, and so on and so forth. From a best practices perspective, I would say proactive risk management is super critical. Not only telling people that this is risky, but going forward and telling them, yes, this is the risk involved, but these are the mitigants which you can follow, and let's go down the path as a business partner. Second, from a best practices perspective, is human capital development. The world is so dynamic, things are changing so fast. We all, at least I'm born in the era of when Excel used to be the new thing. Today we are living in the world of Gen AI, right? So things are rapidly changing. We have to invest into human capital development, which is super critical. So these are the things I want to put it on the table.
Yeah, thanks, Vikas.
Just a quick line, I would say. For me, it's all about data analytics and how we can put predictive analysis into the business to ensure that the proper decision making can happen. So that's the way for me.
Everything is covered, so I'll just put it what way. Today's CFO is kind of co-pilot with the CEO, right? You are not out of the cockpit, you are in the cockpit as a co-pilot. So that's the way it is. And obviously now today's CFOs are also doubling up as the chief risk officer, or and even with the BRSR coming up in terms of a big way in terms of sustainability actions and reportings. Because when we are going for reporting, you have to get into so many, and you realize that okay, this is what you can do. There is a big thing, big set of actions which you need to do, because you are not even measuring them so far. So that's what I would add. Thank you.
Yeah, thank you. Thank you to all the panelists. So just to sum it up, what we all, discussed today about was, all the different aspects and beyond finance as well. That financial strategies are obviously very important for sustainable growth, and they include multiple aspects. It is maybe efficient resource allocation, that is managing all of your investments in a strategic way. It is all about risk management. That is not just, looking at what you are doing today, but what could be the potential risk, and measuring the risk, and then, looking at the mitigation strategies as well, as you mentioned, Vikas. And that is, pretty much like resilience building measures for your organization, so that you can sustain as a true blue profitable organization, which is on the path to exponential growth. And some of the things which we talked about was sustainability as well, and CFOs today being the business CFOs and partnering with all these stakeholders internally within the organization, being also, responsible for external world, responding to the external world, that is to all the shareholders. So in nutshell, I did promise all of you a power-packed, punch-packed, insightful session, and that is what we delivered. Thank you so much. I hope that you found it very helpful. Thank you to all the panelists for sharing your views.